500 pips, 3 trades, 1 mind-blowing strategy. Traders, if you're tired of false breakouts, late entries, and emotional decisions, then get ready, because today I'm revealing the Quasimodo and Doji Kink strategy that's been quietly stacking pips in the gold market. Welcome back to Skynet One Forex, where we dissect the psychology of price, precision trading, and smart money setups that actually work. Let's get into it. Before we jump into the charts, let's break down the two beasts behind this strategy. The Quasimodo, also called the over and under pattern, is a price action formation signaling trend reversals. Here's how it works. Price pushes into a higher high or lower low in a downtrend. It pulls back, giving the illusion of a retracement. Then it breaks structure, violating the previous low. Finally, it makes one last push, creating a deceptive liquidity grab before reversing hard. This last push traps breakout traders and creates fuel for the reversal. That's where smart money steps in. The Doji Kink is a term some traders use to describe a doji or indecision candle that forms at a key point of exhaustion, usually around supply or demand zones. It's a small-bodied candle, often with long wicks, signaling confusion, lack of momentum, or a brewing reversal. When you combine these two, Quasimodo structure and a Doji Kink at the reversal zone, you have a sniper entry backed by logic and liquidity. Gold, XAUUSD, is volatile, reactive, and loves to hunt liquidity. That's why this strategy works beautifully here. Identify major trend on 4H or 1H. Wait for Quasimodo formation. Impulse, pullback, break of structure, trap. Mark the origin of the last push as your potential supply-demand zone. Zoom into 15M or 30M and look for a doji or pin bar at that zone. Wait for confirmation, a strong engulfing candle or volume spike. Enter. Stop just beyond the trap candle. Target 2.1 minimum. Let's break down the first of the 3 trades. Trend. Bullish. Quasimodo formed with a higher high, structure break. Doji prints right in the zone. Bearish engulfing candle confirms entry. I entered short with a 30-pip stop. Trade hit TP1 and TP2 in under 12 hours. That's 180 pips, clean. Same pattern. This time on the 4H chart. Again, we spot a classic doji candle rejecting the Quasimodo zone. That's hesitation. Market makers collecting orders. We enter on the bearish confirmation candle. Result, another 160 pips. This one was my favorite. Same setup, but I used the 15M chart for entry confirmation. That level of refinement cut my risk by half and bagged over 200 pips. Here's why this setup works, and it has nothing to do with luck. Quasimodo traps emotional traders. Doji Kink signals market indecision. Smart money uses these to build liquidity pools. This setup aligns with order flow and auction theory. If you're entering blindly or emotionally, you're the liquidity. This strategy lets you trade with the market makers, not against them. Here's your Quasimodo plus Doji Kink strategy checklist. Identify trend. Spot Quasimodo formation. Mark supply-demand zone. Look for doji or small-bodied candle. Confirm with momentum candle. Enter with tight SL. Risk 1-2% max. Take profit at next SR or 2R plus. Back test this. Forward test it on demo, then go live. This setup doesn't just make sense, it makes pips. If this breakdown opened your eyes to how price really moves, smash that like button, subscribe to Skynet One Forex, and share this with a trader who needs a strategy upgrade. Want a downloadable PDF cheat sheet of this strategy? Check the link in the description. I've got you covered. And remember, trading is a mind game. Learn the patterns, master your psychology, stack your edge. I'll see you in the next one.